I'd love to introduce you all our three lovely panelists. First one, let's see, let's start with Guy here. Guy Hardar from Fireblocks. We have Federico from PayU, as well as Suresh from NextXT. Righty. Great. Before I kick off with introductions with the three of you, just brief intro, I guess, about the session in general. When I think about blockchain and crypto, payments has always been top of mind as an interesting use case. However, most recently, before joining Stellar, I was at Deloitte, and we really looked into what are some of the use cases that didn't make sense for blockchain, and payments was always something that we thought had legs and financial institutions were interested in. Now, for this panel, I want to dig in a little bit more on enterprise payments, because similar to consumers and retail users, businesses and companies also experience the pains of leveraging our existing financial infrastructure. And that infrastructure was built for some people, as well as some organizations, especially larger organizations, but not for many. So these three gentlemen they all have real hands-on experience working with blockchain and crypto, particularly in helping organizations leverage blockchain for payments. And without further ado, if I could ask you all just give a brief introduction of who you are, the company that you work for, and how today you are involved with how you're leveraging crypto or blockchain for B2B payments, enterprise payments. Please do, Guy.
Hi, everyone. My name is Guy Adar, and I'm from Fireblocks. I'm heading the BD for our payments team. And for people of you who don't know Fireblocks is essentially the go-to crypto infrastructure, wallet infrastructure for any company that has crypto on their balance sheet or want to have crypto as part of their product offering. Probably should use Fireblocks or are using Fireblocks already. And specifically to provide a bit more context, so I founded a few years ago with two other partners a company named First Digital. We're focused only on blockchain-based payments, and Fireblocks acquired our company, and we joined about 8 months ago. And today we're helping different companies, especially PSPs, to do all kinds of payment use cases or payment operations. And I don't want to steal the thunder from my peers here, so I'll let them introduce them and can talk about it in more details later.
Thank you. Federico?
Thanks for the invite, by the way. Nice to meet you all. My name is Federico. I work for the company because it's called PayU, right? What PayU does, we are a merchant payments company, so we facilitate online commerce, right? Competing with the likes of Stripe or Adyen. Our twist is that we operate almost exclusively in emerging markets. So we are a big payments player in India, Southeast Asia, Africa, as well as Latin America. And what we do with crypto today, it's basically two things. Like number one, we facilitate the purchase of cryptocurrencies online. And by that, I mean like facilitating the on and off ramp to crypto for exchanges and crypto marketplaces and all these sort of like merchants you might be familiar with. And increasingly, we're looking at other use cases for cryptocurrencies, specifically cross-border settlements. Probably we can go a bit more in detail about that later, but that's something we find increasingly interesting to apply our technology to.
Hi, I'm Suresh. I'm with NetXT. We specialize in securitizing illiquid assets and also enabling payments for those assets as well. My experience includes, fortunately or unfortunately, being in a bank as well in the past. So have some familiarity with payments, also familiarity with smart contracts and also securitization.
Great, thank you. Why don't I kick off with a very basic question? When we say crypto payments, what does that actually mean? Because I feel like there can be different definitions depending on the people that you ask and the context that you ask it. So very simply put, how would you define crypto payments?
Yeah, so every time people hear crypto payments, they envision like, oh, so it's how a business accepting crypto as a payment method, or maybe it's how I'm sending crypto from my wallet to another wallet, which, okay, it can be viewed as a payment, but for me personally and for us at Fireblocks, we see payments as something more broader. So if you think about today, all the different use cases that companies like PayU, for example, are doing, you know, it's like cross-border payments, or it's how they're settling with their merchants, or it's how businesses paying each other, B2B payments. So these are like the use cases we are looking at in Fireblocks. Cross-border, competing or trying to improve the process of correspondent banks today, how businesses paying each other, how businesses are also accepting crypto as a payment method, right? But it's a much broader topic, I guess, more than just sending wallet-to-wallet. Wallet-to-wallet transfer is just a transfer. It's not a real payment, from my view.
Yeah, I tend to agree. I think like the use case of like buy coffee with Bitcoin hasn't really took off, right? People have tried for quite a while. There is a bit of a niche for that, but to be entirely honest, that's not really where the action is, right? I think increasingly a lot of legacy payments players are looking into crypto from another angle, which means, how do we facilitate the purchase of digital assets through credit card or alternative payment methods? And that is increasing pretty fast, right? I think WorldPay, Checkout, as well as PayU, that is a pretty big business, and increasingly the networks are becoming comfortable with this sort of like use case. But we're starting to see at the back end, which is probably not really where the customers interact with payments. Well, you're starting to see payments company dealing with stable coins, which are arguably kind of like a killer application for blockchains to be increasingly used to settle value, especially cross-border and in some other niches.
Could I just quickly add before, and I want to ask you something more specific, Suresh, but Federico, you mentioned credit card and how credit card companies are partnering with, or essentially leveraging crypto to some extent. That's assuming certain markets have adopted credit cards. Now let's look at certain emerging markets where they haven't adopted credit cards. What are some of the interesting use cases from your standpoint that crypto can get to, maybe leapfrogging that aspect? And how do you envision PayU's role in those emerging markets, and particularly just leveraging blockchain directly?
So I think that's an interesting question because ultimately, domestic payments are typically fairly effective, right? Oftentimes people think about countries like Brazil or India. They imagine like, pretty poor financial infrastructure. But in fact, those countries like India specifically, but also Brazil, they have a pretty efficient like retail domestic payment system, right? So I don't really see like crypto really disrupting that, right? Because in those countries where like, the traditional rails work about fine. I think we're starting to see that crypto is becoming quite attractive for active, where there is a bit of attrition, where traditionally, cross-border, for example. Cross-border, it's a fairly complicated flow. Like you have like correspondent banks that communicate through SWIFT. You have on and off ramp. You have FX in between. So a lot of parties involved in those transactions. I think digital assets provide an alternative in those cases where they actually can cut off the intermediary. I mean, I think that's a fundamental kind of like a proposition of blockchain, right? And in those cases, well, you can start to create some real value by cutting off the traditional financial infrastructure, by building on a new one. I think for the first time, well, we're starting to see the option to build on a new financial stack without necessarily having to ask Visa and MasterCard, right? We're building on an open source technology, whether it's a Stellar or any other blockchain. And that really allows like quite an interesting applications for this new technology. A lot of like innovation is happening on that side.
I think that makes a lot of sense. And Suresh, do you have a perspective, because Federico touched upon banks, intermediaries, and I know you have a lot of experience working with these counterparties.
I have a philosophical answer here. So
please do.
So to me, crypto payments is not necessarily buying coffee, but it's more of evolution in the way human beings interact with each other in value transfer. It started out with trust is one of the fundamental components when you transfer value between human beings and trade. And with the banking system about a few hundred years ago, they instituted regulation of, they were ensuring trust by enforcement through regulation. And so essentially the cost of trust is the cost of regulation partly, and that has gone up to a very high level today. So with the introduction of the blockchain-based payments, you have the costs of trust coming down with math being the intermediary today, which is a trusted intermediary because the math works the same way no matter who computes the algorithm. So when you reduce the cost of trust, then you're enabling financial inclusion. Because ultimately, as human beings, we evolved through knowledge acquisition. and knowledge is also long tail, and the ability to move small amounts of money globally allows you to capture knowledge better ways. So that's kind of how I look at crypto payments, as an evolutionary mechanism of the human beings, which allows us to bring in math as a trusted mechanism for human beings to trust each other in payments, as opposed to the current infrastructure, which is regulation by governments to ensure trust and consumer compliance.
So can we talk a little bit about that? I mean, you mentioned regulation for a while, and I don't disagree with anything the three of you have said so far, which doesn't really make this that interesting, but I'll try to find something to disagree with you on at some point. But if crypto payments specifically for enterprises makes that much sense, why hasn't there been more adoption? Is it because of certain regulatory challenges? Is it because there's still reliance on traditional rails or traditional payment or financial players to partner with these fintechs that are building crypto solutions? What is that? Like, what are the hiccups?
I can respond to that, right? It's the same old reason why change is very difficult. Any large organization has multiple moving pieces, so any change it's a disruption,
Sure.
whether it's a crypto or not. So it takes time to implement change in a large organization.
But we've had time. So like moving away from the philosophical part, which I don't disagree with
Time is relative
on.
to a generation, so different generations see time differently.
I hear you, but Guy,
Yeah.
you're working with some of these companies directly. What are some real problems and roadblocks that you see them face?
Yeah, so I think about your point about why it didn't take off, at least until now. We see it taking off right now. I think that why payments use cases, real payments use cases, didn't take off until a few years ago is because only now you see like two things, major things that really happen in the market. The first one is the proliferation of stablecoins, okay? Because you must have this, because payment, like wallet-to-wallet transfer is not a payment. There will be probably like interaction between crypto rails, like the crypto payment system, blockchains, into the traditional fiat rails, depends on the territory. So once you need to connect or have these two systems work together, you need something that will make this connectivity happen, which is stablecoins. And another thing that happened is also proliferation of on and off ramp vendors, right? Because if you want to move money from Mexico to the US, you need a stablecoin. You need to have liquidity for the stablecoin. And you also need to have a partner to help you on-ramp in country A, in Mexico, for example. You need a partner to help you off-ramp in the US, right? So these two things that happen right now really enable us, at least in Fireblocks, to help payment service providers and other companies to do all these different money movements, because we see it. It's not only crypto. All of us earning our salaries, paying tax, paying our mortgages in fiat, right? So it will, at least for the next 5 or 10 years, I want to say, it won't be crypto only when we're talking about payments. It will be this interaction between crypto and fiat systems.
Okay, so what I'm hearing from you is you noted two fundamental blocks that was missing until now. One being the proliferation of stablecoins, and the other being enough on and off ramp and access points for people to move from fiat into the crypto world. So now with these two things in place, you believe that it's still going to be at least 5 to 10 years before people can really transact in crypto. Would you say that's more of a global view, or is it more of a US-centric view because of currently where we're at with
I mean, today we
Yeah.
are solving, like us at Fireblocks, we're solving like boring problems,
Okay.
like real world problems for the companies we're working for. I'm talking about the payments part in Fireblocks. So if a PSP, for example, wants to, as I said, acquiring funds in Mexico and they want to move them to the US, it's a problem that the actual problem they're trying to solve is to settle faster with their merchant. They're trying to improve the cost. They're trying to improve the way they predict or know where the money is. They have visibility to where the money is. So the end merchant that getting settled is getting settled in a day instead of 4 days. It doesn't know there was crypto in the back end operation of these PSPs, for example. So the PSP is now so much more attractive to this merchant because they settle with them in 1 day or in minutes versus 3-4 days. And also, internally, this PSP treasury department has much better operation. They can predict better, they can plan better, their costs are improving. So we're solving, it's like, real world problems
Yep.
using crypto rails. So I don't think you can do that like only over blockchains, because these merchants wants to get settled in fiat, right?
They have to pay their rent in local fiat.
Yeah, although I would just say at least that we do have use cases where our PSPs or our payment companies we're servicing are settling in USDC, for example, or in stablecoins, but these merchants are more crypto native merchants that are understanding it. But the majority, 99.9% of the world, don't understand yet crypto. So,
That's fair.
yeah.
So then, Federico, as a PSP, and I know PayU has made a decision to start adopting more crypto and leveraging crypto for your settlement. What are some of the challenges that you have seen that your organization is facing right now?
So first of all, we are a regulated institution, right? So we interact with the value chain that includes card acquirer, card issuers, settlement banks. So like kind of like the traditional, I guess, like dinosaurs of financial services. Hopefully there's nobody in the audience, but you need to educate those parties, right? As an organization, we might be like further along like the, I guess, learning path, right? But all the counterparties that we have, including, of course, regulators, right? It takes time before they really understand crypto. I think until recently, there was this understanding that crypto is predominantly used for, let's say, questionable use cases, right? I think that was like the common understanding among like financial services professional. I think over the past couple of years, there's been a bit like a step change. I think now, like from kind of like crypto being like a career liability is becoming kind of like not being up to date with crypto is becoming kind of like a career liability, right? So I think increasingly institutions want to experiment with crypto. But really the main hurdle at this point is just like education, finding people that actually understand and at least like are willing to learn. And on top of that, you need to educate the regulator, right? In a lot of jurisdictions, regulators are still like cautious towards crypto. I think there are serious concerns with regards to like currency substitution as well as like capital, evasion and whatnot, right? So I think you need to have like a friendly regulator, or at least a regulator is willing to experiment together with like a financial institution stack that actually understand, or at least is willing to run some experiments to, get some new products off the ground with crypto.
That makes sense. Can we spend a little bit more time on stablecoins? I know we had a panel about this yesterday, but Suresh, I'd love your take on how you guys are leveraging stablecoins, particularly as it pertains to payments for illiquid assets that you're currently tokenizing.
So our view is the existing set of stablecoins are not institutional grade yet.
Even USDC?
No.
Why?
Look, two guys are in a garage with a dog, creating a stablecoin doesn't mean it's institutional grade. Okay, so with all due respect.
I think Circle is bigger than two guys in a garage, but I'm curious.
I'm not saying, I didn't mean Circle. I generally meant if they had two guys in a garage, then they qualify. If they didn't, they don't. But that's jokes aside. Okay. So there are issues in stablecoin today that will prevent almost any institution that has a decent risk management from using it. Because it's a simple example. You lose your key, you lose your money, and 5 blocks will say you'll never lose your key, right? But the risk will be quantified, and you cannot put $25 billion in stablecoin and find that you can't get to it because something went wrong. So there are things that you need to put in place at an institutional level for them to adopt it as the mechanism to move money. There's no question that it gives you the ability to move money globally. It's accepted today and all of that. But $1 trillion in daily volume or whatever it is, it's still probably the first half an hour on Wall Street volume on a Monday morning, right? So the stablecoin design itself has to be rethought.
What's missing? What's missing?
It's a whole bunch of things. That's part of what we have.
Give me your top 2 things.
No, at a minimum, you can't lose your money because you lost your key, right? That has to be fixed in some fashion, right?
So how would you? So then you would introduce a third party who would manage your private key so that your grandmother.
How we're solving that is something we'll announce. But the issue is that's only one of several things that if you, having been inside a bank. And the kind of risk management required by regulators in terms of risk mitigation, how you address things. There's no way, as for example, a bank can say, you lost your password. So sorry, we lost all, you can't have your money anymore, right? That's not going to fly, right? And it fails consumer compliance in any country. right? So a lot of these things need to be addressed, and they will be addressed, right? And the current version of stablecoin is not, it's maybe version 0.1. There's going to be stablecoin version 10 coming at some point, right? We're all still, I don't use Microsoft, but nobody's still on DOS, right? We are beyond DOS, beyond Windows XP, beyond all. So this is going to evolve, right? So for enterprises to use it, there is going to be a design evolution in stablecoin.
I look forward to seeing how next XD will help solve for that problem, because I think we can all definitely work together on driving adoption of what you're.
You want a disagreement?
No, I like it. I like it. But a little bit more on stablecoins itself. So when when you guys are looking at stablecoins and leveraging that for settling enterprise payment volumes, what kind of characteristics are you looking for, and how do you choose which stablecoins are beneficial for this use case?
Yeah, so I think that so first of all, I would say that Fireblocks is not in the money flow, right, of these different payments, different use cases. We are helping our customers to move those funds, and they're using it by using or leveraging our wallet infrastructure and our security infrastructure. Now, we, as a trusted partner, are recommending them what on and off ramp partners to use, or what stablecoin to use, and what blockchains to use. Like Stellar is one of our favorites, obviously, because it makes sense for payments, right?
Thanks for the plug.
No, but seriously, fast and cheap. If it wasn't fast and cheap, it makes no sense to move value over it. So Stellar is one of our favorites, and we are recommending stablecoins that have enough liquidity, that can be trusted, and that they have enough also liquidity depends on the specific corridor, right? Like you have corridors that one stablecoin can be more liquid or more trusted, but at the end of the day, it's the decision of our customers. All of us know the main stablecoins, right, that we can trust at least for now, but we believe that, Suraj said it, that it's still small, it needs to grow 100x for more parties to join this party of moving funds or moving value over these payment systems, blockchains.
That's fair. Anything to add, Federico? Or?
I think from where we stand, there is a pretty clear path, at least in the US, where stablecoins will receive some sort of regulatory framework, right? Yeah. We don't know if it's going to be 6 months or 24 months, but that, I would guess, it's kind of like the high-level timeline. And in the current environment, it seems like USDC might be like the front runner there. I think in the future, you're going to have many more regulated financial institutions looking into issuing their own stablecoin. I think it's becoming quite an interesting business case, right, for a lot of those banks to issue a regulated solution. But ultimately, I think stablecoins will be regulated. I think that seems to be the clear line, and those will be custodial stablecoins, right, which have some interesting properties. I think the non-custodial ones, I think from a technical standpoint, are extremely innovative and quite interesting, but also come with some big, risks, as everybody has seen, a few months back with Luna, right? So I think from our use case, as a regulated institution, we trust more the custodian version, which obviously is kind of I would say a tone down a notch in terms of the whole crypto story. But they're ultimately what we trust the most for moving our customers' funds.
Let me add something to that.
Please.
So something else going on here in the industry. We've seen the unbundling of loans.
The unbundling of loans?
From
Okay.
banks, right? So there are more fintech-originated loans in the market today than bank-originated loans. We're starting to see the unbundling of payments. You have companies, right? I think the stablecoin could trigger the unbundling of the deposit account, right? So that's the thing that worries the regulators the most, because if you unbundle loans, you unbundle payments, you unbundle deposits,
Role of the banks in those, yeah.
So the banks are an important institution in any society, especially for implementation of monetary policy, especially related to liquidity of the common of the citizen in a country. And the difference between a French Revolution with guns, in case of the U.S., and a prosperous country is liquidity. And so you're going to see some pushback on the regulatory side to prevent the unbundling of the bank account. There will be parts of the world where it's already started to happen. And it's good and bad. If the unbundling happens, the math, it's essentially man and math with the blockchain, with everything else being disintermediated. So therefore the cost of trust goes down, right? So it's going to be an interesting world. The dynamics, which way it's going to play is not clear at this point, but the first salvo was fired in the last few weeks.
Yep. Yeah, I think the role of banks will change over time because they have to now. And I think
today the role of bank is not very clear.
Sure. Having worked at a bank as well, and having worked at a bank in an innovation group looking at blockchain and distributed ledger technology, I think all of them are very much aware that they need to change their business model. And to your point earlier, change takes time, but it doesn't mean that it won't happen. And I think the fact that we have over 350 people here, some from banks attending this conference, to me, is a testament that they firmly believe change is coming and it's inevitable. Either they embrace it or they become obsolete. So
very few institutions have lasted a few hundred years or more.
Unless they're state-backed.
If you think about it.
Right. But I think you raise a really good point because it's something I don't think we talked about yet on this panel, but central bank digital currency, CBDCs, and how they could play a role together with stablecoins and why certain countries may not make sense for them to issue their CBDCs because their current currency does everything that they need to do, where other countries it does make sense. And then how do stablecoins and CBDCs play together with each other?
Let me take a quick stab at it. It's very different. The way to think about, at least, let's take India, right? India thinks about these things in a very practical way. They look at UPI and say, we're going to make it free.
Sure.
Why? Because we don't charge you for the rupee note. We don't charge you a fee to get access to currency. So if we, as a government, require our citizens to use UPI to make payments, we will not charge for it because you don't pay for the currency notes right away. That's a very practical, simple thinking. And the government says, I'll get my ROI in taxes. Do other countries think the same way? I don't know. US doesn't think like that. Right? US has got a private sector RTP, which is similar to UPI, but it is pretty, one of the most expensive RTGS in the world, right? It's 4.5 cents minimum to send money through that, right? Whereas in India, it's pretty much free. So you'll find that the thinking and the vision of a government is going to drive their infrastructure of CBDC, how they're going to design the CBDC.
But then the adoption of it is still, to some extent, the choice still lies with the user. Certain governments' users may not have a choice, for example, in China, but in other markets, if they have an alternative and they can hold their assets, outside of a CBDC, and those assets can retain its value, it can be sent, transferred, it can be invested. Why would they want to hold their assets in a central bank digital currency?
You brought up a very big point. Who's going to be the next reserve currency of the world? Is it still going to be the dollar? Is it going to be a dollar-based stablecoin? Or is it going to be some other derivative hybrid where people want to keep their money? So that's really what you're asking. I don't know the answer.
We can get to that. But before, do either of you have any comments on CBDCs and stablecoins versus stablecoins?
I'm of the view that if we're going to get to a CBDC, and depending on how it will look like, nobody really knows. Everybody's speaking about CBDCs. It's a bit like the metaverse, but nobody has really seen them in the wild. I think adoption in this case will probably be pushed by the central bank. Literally by fiat. A central bank and tells you, hey, you pay taxes with this or you go to jail. So you might not like the technology, but you will have to adopt it, right? So I think in this case, it's the adoption could be actually quite quick, right? The question at this point is that, is there really a benefit for the user? I think it's kind of like the dream of a central banker, right? Having a CBDC phone, they snap their finger and they see the whole economy on a dashboard, right? The question is going to be, hey, is there going to be really a serious value add for the user or not, right? I think we will need to figure that one out, right? I think from currently where we stand, the political debate doesn't really seem to favor that much CBDCs. I think a lot of political bodies and politicians are not particularly happy with that because of privacy and various other concerns. we will need to see if actually central banks get a political mandate to go and build this sort of technology. They've done it in India, in China. We don't necessarily know if, Europe doesn't seem to be that happy about that, at least. We'll see. I think it's still too early. 10 years from now, at least.
What does that mean for Fireblocks? If, because you guys right now are obviously leveraging stablecoins for your payments business. What would that mean for you if certain governments were to?
Yeah, so we are actually looking at it. We just hired somebody who's solely from the Bank of England. His name is Varun. He's leading all CBDC efforts within Fireblocks. And, we are aware it's something that will take time. I agree with Fede that what is the benefit for the end user is not so clear, right? Because local RTGS systems are kind of okay. If you want to move money internally inside a country or to pay, it works pretty much okay. I personally am more excited for now, at least, about stablecoins. Because stablecoins are solving so many of the issues we just discussed, like in cross-border payments and other. When you think about it, stablecoins are essentially like fiat on the blockchain. You enjoy all the benefits of the blockchain, the speed, the everybody can be connected to this payment system. It's truly global. And for now, I think stablecoins makes more sense. If CBDCs will come along, we for sure will support those in the Fireblocks.
And based on the merchants or the businesses that you currently support, outside of US dollar, what are some of the other currencies that you'd like to see have stables created for?
All of them, but the main corridors of the world, right? So it will be great, and there are a lot of projects that working on it in Brazil, for example, on Brazilian stablecoins. Many companies or many firms trying to do that. The dollar is kind of solved. Now we have euro, or the beginning of that. But essentially, any country that has an interesting corridor, so if it's Brazil, US, Mexico, US, India, although India are not really favoring crypto right now. But yeah.
Fede, PayU has a pretty big presence in emerging markets, and particularly Latin America. Are there any other currencies that you would like to see take shape in the form of a stablecoin that you think could be useful for your business model?
I think ultimately Colombian pesos as well as Mexican pesos could be fairly relevant. I think Brazil, there's a lot of initiatives. And it's interesting because what's happening in Brazil, it's primarily driven by a kind of friendly regulator, right? I think companies are allowed to experiment in Brazil, not so much in Mexico and in Colombia right now. But I think eventually, we will need to see stable coins for all those currencies, right? The question is how big you're going to be, right? But ultimately, something that needs to happen to really realize the full potential of the technology.
I would just add to that I would be happy if we start with good liquidity. Just even USD stable coin to the local currency, good enough liquidity in those markets in Mexico and Colombia will be a good start.
I think we have a panel on liquidity. I don't know if that's happening later today. Okay, great. You guys should all tune in for that on this stage, or maybe the main stage, this stage. Okay, thank you, Jordan. Okay, we only have about 5 minutes left, and I want to ask each of you to talk a little bit about a project that you are working on that you're really excited about. So why don't I start off with you, Suresh?
I was about to doze off, sorry. So what we're working on now is finding liquidity for illiquid assets. So there is about more than a few $1 trillion of illiquid assets today in the world. And this was a problem pre-winter, pre-crypto winter, right? Now, the crypto winter has also sucked out liquidity in the real markets indirectly as well, so, or vice versa. So we are looking at that and saying, how do we leverage the blockchain distribution? How do we leverage the existing customer base to bring real assets, tokenize them into this world, and generate liquidity? So that's something that we're working on right now.
Great. Federico?
So we operate in countries where you really can see the financial infrastructure start showing some cracks. I'm talking about Turkey and Argentina. In those countries, the currencies are extremely volatile. We run a business there. We are increasingly looking at ways to settle cross-border in a much faster way by using stablecoins, so that we don't have to rely on a traditional banking system, which takes days to settle. There is a big FX component. Stablecoins allow to facilitate those flow and settle it in a much shorter time span, which means we have less FX exposure as well as lower working capital. And then, of course, it's actually quite clear benefit for our end customers, which are traditional businesses. They don't necessarily need to know that actually we're using crypto. We disclose that, of course, but we are just solving age-old problems with crypto in a more efficient way, right? So I think that's something we're looking at for emerging markets.
Yeah, so same as Federico said, we are also, I am personally very excited about projects we're doing, again, helping a PSP to move funds or to tackle the challenges that Fede just mentioned. You processing or acquiring funds in Latin America for a big famous merchant in the US, you need to send the money to the US in US dollars. Process will take 4 days or so. We are able to do that or helping our customers do that in minutes with a great benefits for cost, visibility, and predictability. This is something super, super exciting. Yeah.
Okay, and the last question I'm going to ask is off the top of my head, asking for a prediction here. Outside of the US dollar, what's going to be the next largest stable coin by market cap by the end of 2023?
Well, Euro is mandating that they want the Euro stable coin to be taking precedence over US dollar in Europe. So you would expect by fiat, by forcing it, it should have a bigger market cap.
And which coin specifically? The Euro coin by Circle or?
Don't know. At this point, don't know.
So you would just predict a Euro stable coin to be the second most.
Well, you naturally expect economies with large GDPs
Sure.
correlate to the stable coin. Given that China you can't do it and India you can't, that leaves you with Europe, right? So
But you think they'll successfully have it taken off? And
I think so.
Yeah?
Yeah.
Okay, despite the challenges you mentioned earlier. Okay, any of you have a different point of view outside of the Euro?
I'd say Brazilian real. There seems to be some traction there. Turkey has some activity on stable coins too. They seem to be working on regulations around that. The question is how big it's going to get, right? Because typically in those economies, people want to keep their money in USD, not necessarily the local currency. But those two I would keep an eye on them.
I think also the Brazilian.
Yeah.
I mean, I don't know in terms of market cap, but in terms of momentum, we see a
Yeah.
lot of projects over there. We see a friendly regulator over there. And also there is like a convenient or interest environment over there to also promote like the use of stable coins there. So I think
Right.
Brazilian real.
If anyone else has a different perspective, I was just in Singapore. I'm curious to see if anyone thinks, out in Asia Pacific, whether there will be an interesting stable coin that might emerge. But you have a question or a comment? Sure.
So, Suresh, in 2008, you bought a dying bank, CBW, right?
Yeah.
And you modernized it. And what's really interesting is that you took like an old banking system and then used it as a front for offering fintech solutions. So you kind of tried to modernize to the old, second version of this banking system. So the next step right now that we're looking at, the biggest threat to banks is actually, I would argue, not stable coins, but CBDCs. If users are starting to hold it in directly with their central banks, then that's loss of revenue for banks. So from what I'm hearing from Guy and Federico is that what you guys mostly benefit from enterprise solutions is stablecoin assets. These are the best enterprise things that you can use for. They're interoperable. You can use them very simply. So Alex McDougall, he from StableCorp, he has a stablecoin offered from a bank, from VersaBank. So the question is that should to compete in the next generations against CBDCs, would it be beneficial for you for banks to be issuing stablecoins? Should everyone be issuing stablecoins and let the best stablecoin win? Is that the enterprise solution that we should be working towards?
That's not a new thing, right? When we bought the bank, I remember the very first month I found some share certificates that we owned in a bank in Wichita in 1930 that was an issuer of currency. So it turns out, pre-1930, banks regional banks issued their own currency, which is what you would call as a stable coin today. Even today in Hong Kong, 3 banks issue the HSBC, the Hong Kong dollar, right? So CBDC in the US is going to be unlikely as a common instrument because the Fed truly does not want to track every single movement of money. You can imagine the volume of data they have to track. They don't want to do it. They clearly will not do it. So it's going to be a model that I saw in another country where, is it Brazil or somewhere, where the CBDC would be issued to the banks. The bank would issue on top of that their own stable coin or whatever it is. So you'll see more of a model like that because central banks really don't want to track every consumer payment for many reasons, right? So that's kind of, maybe a small island could do it, but I don't see any large economies trying to go in that direction because it's too much work. They don't want to hold the data.
Yeah.
One last comment from. Go
Yeah,
ahead.
last comment. So I think banks are already doing it today. They're issuing stable coins today. We specifically in Fireblocks are helping them with this. Like we had a project like this in Australia with the bank, with the ANZ Bank, helping them issuing their own stable coin. We're helping others. And I think CBDCs anyway will take a long time to be, depends on the region, but it will take a long time. So in the meanwhile, banks should look into this, I think.
Great. Well, I want to thank each and one of you for joining us for a lovely conversation. Hopefully you guys learned something and you found it insightful. You can have a chat with any of these guys or me if you have more questions or comments. Thank you for coming.
Thank you. Thanks all.